Hello, everyone. Thank you very much for the introduction, Rosanna. We are very excited to be on stage speaking with you this afternoon. For green ammonia and hydrogen producers and for their off-takers to really invest at scale, they need confidence that the infrastructure that is going to be needed to move those molecules from the place of production to the place of use are going to be in place when they need it. Over the past few years, in my practice of helping green ammonia and hydrogen producers negotiate bankable offtake agreements, I've seen firsthand experience situations where there are questions around the sufficiency and availability of hydrogen transportation and storage networks, creating complications for deals, and ultimately chilling investment in the hydrogen sector. To help examine certain challenges and opportunities with bringing this infrastructure online, I'm very excited to be joined up on stage today by Alicia Eastman, Managing Director of APC Investors and Board Member at Intercontinental Energy, a leading green hydrogen and ammonia producer. Lionel Sinai-Sinel Nikoff, Strategic Advisor at Beyond Aero, which is designing a hydrogen electric aircraft for zero emissions aviation. Professor Lourdes Vega, Founder and Director of the Research and Innovation Center on CO₂ and Hydrogen at Khalifa University. And finally, Romain Verdier, Deputy CEO at Verso Energy, a French developer of industrial-scale green hydrogen and e-fuels hubs. So we're going to start this session by looking at some of the challenges associated with bringing this infrastructure online, and then we'll pivot and we'll look at some of the mechanisms that we have to overcome those challenges. Alicia, starting with you on challenges, putting your investor cap on. If you're looking at infrastructure investments in the hydrogen sector, what are some of the challenges that you're seeing?
I think infrastructure is in itself a challenge because it is so long-term, and it takes so long to actually execute. So I think you end up with a number of risks on top of one another. But obviously, without having a carbon tax and without having strong regulatory push to use hydrogen, it makes it a hard sell to build the infrastructure for it. And I think we had hoped that the IMO would have turned out differently in October, and hopefully it will be better in April. But things like that, an actual global mandate, something that actually compels companies to use hydrogen-based fuels, obviously that is going to make the infrastructure easier to build. So like all things, you have to have a market. And if that's not the case, you have things like, let's say, transportation on ground, not shipping. We're talking about, trucking in Europe. I think there's still a lot of debate between whether things will be electric or hydrogen. And I think there's still people who think it has to be one or the other, or that we have to use the grid for hydrogen, when actually we could build two different sets of infrastructure and it could be cheaper. Yeah. But that's not entirely clear yet to a lot of people.
So lack of certainty on demand and market, and also technology selection playing into it.
Yeah.
Lourdes, similar question, but from a technical perspective. What do you see as some of the technical challenges and risks associated with putting this infrastructure in place that might be causing investors to pause a little bit before they put money in?
Thanks for the question, and thanks for the invitation. Actually, if you think of the technology risk, there are not that many. But I think from the investor's point of view, the investors are more concerned about the reliability and the predictability of the assets that we will use. Then I can give you a few examples related to this. For example, for the materials, how will they last? Are we repurposing the pipelines that we have for gas transportation now for hydrogen? Because we need to know the differences between them. So how do we do this in a safe and proper manner so that these pipelines will last? If we talk about the storage, we can have a storage, underground storage at the scale, but we don't have this everywhere. No? It's not geographically available for everyone. So if we talk about the storage on the surface, then we have the issues related to the materials, again, to leakage, to the type of, it's much more expensive and less efficient. Then we can talk also about the integration. So when we are going to develop these infrastructures, how much hydrogen are we producing, transporting that is needed in the final use? So we need to consider all this in order to lower the risk of the investors and give them the confidence that what we are doing is correct. Yes, there are technologies there, but it's more at the scale level where we have to be worried and concerned.
So doing things kind of slow to start and building up to it is a way to perhaps de-risk some of the technology concerns that investors might have.
Correct. So the point is hydrogen is not new, correct? We had hydrogen in industry for a long time. What we are talking is about a different scale and for different needs. So that's what we need to consider in this case, the scale up and the design of this at the right size.
Okay. So if we're talking about scaling up and it'll be a process, it's not going to happen overnight. Lionel, as a potential end user for hydrogen in the aviation sector, do you have any concerns about lack of availability of infrastructure being there as and when you need it, or how are you seeing this play out?
First of all, I will start with a smile because I'm glad to be here, but also I'd like also to lighten the mood in the sense that I think we should see that from a very positive perspective. Today, we're at a great time where we have basically everything that is here and just need to be combined. So we come as Beyond Aero, for instance, as the offtake dream partner. And we are leveraging, because we're developing a hydrogen electric aircraft, starting with gaseous hydrogen, liquid will be for later, and we're entering the business aviation market as the initial market, which is a growing one. And so we're leveraging the existing ecosystem, basically, and technologies. We are able to start pretty fast in alignment with the regulators with what we have today available, which is already and growing a network for hydrogen for the land transportation. And that is pretty easy at the end of the day to bring that to the key airports for the key routes, which covers 80 to 90% of the requirement of this very visible industry, which is aviation. So yes, in the long run, commercial aviation will go with liquid where it's more complex. But gaseous hydrogen is a very good start for the industry, and we can start that pretty fast.
You touched on a good point there on certification.
Yeah.
I mean, we're moving around hydrogen at scale. Lourdes, what are some of the technical risks associated, not technical risks, but I guess safety and environmental risks associated with moving around hydrogen and derivatives at the types of scale that we're talking about?
So hydrogen and its derivatives are not the same with respect to that. So hydrogen is a very flammable and very light molecule. So we have to worry about this when we talk about safety or moving hydrogen around. The same is related to the breathability of the materials because of the hydrogen reaction, let's say. So then the good things about this is that we have been moving hydrogen before. So this is known. What we need to do is how to put this in the context of the new hydrogen economy, the way we are moving that. For its derivatives, like methanol and ammonia, there are completely different issues. Then you can move them as liquids, and we know how to move liquids. So this is good, easy. You don't need that extreme conditions, but they are toxic. And then you can have things related to contamination of the water or the environment, etc. Again, there are rules already because we already move ammonia and methanol that can be applied for this. But we need to consider this when we design the infrastructures. And now the difference is also that we are going to move hydrogen in places where there is population around. It's no isolated places. So this also needs to be considered as an additional safety for this. But overall, I think we need to build trust on people that we know how to do this, and we can do this in a safe manner. So we don't need to worry people, neither worry investors. We have to do the right thing as the industrial standards that we do.
We're moving this stuff cross-border and all around the world. Clearly, there's going to have to be some collaboration and coordination on certification and rules. What kind of progress have you seen made on that front?
By no means we need that. Otherwise, we cannot move. So actually, but we are moving in this direction. And probably, if you want to give me one single sentence, we need to do it faster and better. So in Europe is advancing. There are some regulations already, like RED second and third. We have the certify, we have the certification of origin. There are different ways on certifying that. Not only at this level, but we also have the International Energy Agency, we have IRENA, We have this event where we are discussing this and we are learning from each other and what will be the best practices. But we really need to do this because we need to build this trust on each other so that we can move them through borders.
Romain, when you hear these kind of points on certification, what do you think about from the perspective of a hydrogen producer who's looking to fundamentally move molecules from one location to the next?
Yes, I think it's very interesting. In fact, I will give you a concrete example. We are a nitrogen producer in France. We are developing a project in east of France, in Moselle, in Carlin, and we will supply a German steelmaker, SHS, through a long-term contract that we have just signed, and we are very proud about it. And between those two locations, there are 24 kilometers. So how to deliver our hydrogen from France to Germany? By chance, the gas natural transport operator is currently developing a refurbishment of an existing gas natural pipe, and it will help to deliver our hydrogen to SHS. So this is a clear and concrete example of the role of the hydrogen infrastructure and the needs of those infrastructure to connect producer sites and consumption sites because it is not always possible to build a nitrogen facility on site close to the demand. And this is also an example that shows the benefits of leveraging the different advantages that some location may have in producing hydrogen. For sure, it is easier and cheaper to produce renewable hydrogen in countries like France where you have a low carbon electricity grid. So this enables us particularly to provide Germany with renewable hydrogen. That being said, clarity for sure is essential in terms of safety, you mentioned, in terms of environmental aspect, but it's also clarity is also necessary for a developer like us, giving responsibility view on who will build the infrastructure, who will be responsible for any delays, and also clarity about the operating model of those infrastructure, which means how the tariff will be set, what would be the balancing mechanism for this kind of assets, all those kind of questions. And I think as developer, we need this kind of clarity in order at the end to provide hydrogen at the cheapest price as possible.
So on that topic of clarity, and I'll come back to you in a moment, Lionel, when you are making decisions to invest in new production capacity, how much certainty do you need on the rules of the game for putting it in the pipe to take it from point A to point B? Are you able to make investment decisions when there's still some uncertainty?
If there are some uncertainties that needs to be balanced between the two people around the table, and if the stakeholder that is responsible for the infrastructure is not there, it's a problem.
Yeah. Regulatory clarity being important. Lionel?
Yeah, just wanted to say that we also just need also to consider the requirement of installations as per the need and step by step. So for instance, when you look in our case, with 7 stations across Europe, you cover all our needs. 7 stations. GCC, for our requirement of aviation, 5 to 8. US, 21 to start with, right? To go already to a certain scale. So with that in mind, you're looking at a progressive approach, which is not scary. And when you look at history and how we've developed railways and highways and everything, and airports, like it's a process. So as the gentleman in the previous panel was saying, we just need to start. And again, when you have a region like here, the GCC, when people are producing locally, and you can have off-take dream partners like us, right? You just need to start.
So I appreciate the message of you just need to start and you need to scale up and kind of build small and then go big. But if you are sitting on top of a massive export project with huge volumes and you need scale today, we need to find ways to get that built and to get that financed.
Yeah.
If you look at some of the initiatives that are being taken in Europe and in the UK, they're coming up with regulatory models to give investors confidence that they can put money into the pipes and eventually get it back out, even if there's some demand weakness and some pricing uncertainty in the early days. Romain, can you maybe tell us a little bit about what you're seeing happen in Europe on that front and whether or not you think it's working?
Yeah, from a European point of view, so the European Commission has proposed a framework about hydrogen infrastructure. It is called the fourth hydrogen and decarbonized gas package. It has been adopted in 2024. I think the overall framework is based on a regulated approach with a transitional phase up to 2032. What does it mean to have regulated infrastructure? It means that there will be a regulator responsible for setting tariff, for monitoring the profitability of the asset, for deciding investments, for settling potential disputes. So this is what it means. It also comes with the necessity to avoid a cross-subsidy between regulated activities and activities in competitions. What are the objectives of this framework? This is to give all the stakeholders visibility on the long run that should ease the financing of this infrastructure. We'll see how it turns out. This regulation is quite new. I give you previously an example of the pipe between France and Germany. This pipe has been developed before this regulation. So a more market approach is also possible for the development of hydrogen infrastructure.
So using regulation to take some of the burden away from first movers in the sector and give them some comfort that they're going to be able to, one, if you're building the infrastructure, get repaid for it, and two, if you're using the infrastructure, you're going to be able to do so at a reasonable price. When we look at some of the models that are coming into place in Europe, I understand that they're focusing heavily on pipelines and compression and effectively moving hydrogen molecules around. Alicia, do you think that there is increased need or some sort of need to also be focusing on ports and ammonia cracking facilities, and how do you think that should be treated?
I think that this sort of regulated asset-based concept could work with ports very well and could work with the cracking facilities. I mean, I think the benefit of it is you're essentially taking traditional project finance, which has 8 different parties, and it takes a year to paper the whole agreement. You're taking the offtake and the regulator and putting them into one, where you actually have some kind of guarantee, and that de-risks the project. So anything that we can do to de-risk the project is definitely helpful. And if I'm shipping in ammonia from Australia and I want it to be used as hydrogen in Europe somewhere, having the availability of cracking facilities is useful. But certainly the ports have to be accommodating for the shipment. Then I think we have ammonia pipelines even in Europe already, and pipelines can be helpful, and having the government support that is going to always be helpful. But I think that there is a lot of advancement in cracking technology, and I think that we are no longer envisioning a world where Rotterdam has like a gigantic cracker and then it just goes into these hydrogen pipelines into the rest of the world. I think ammonia is easier to move, and then cracking has gotten really, really competitive and efficient. And you can have small crackers that people use on site, and that's a much easier way to do it than having a huge cracker that's not very efficient. So that involves more regulatory bodies, of course, when you're crossing over all these different country lines, but it's going to happen anyway.
And I'm going to come back to this theme about technology and the evolution of technology and what that means for the infrastructure build-out at the end, but that's a very important point that we want to keep track of. So looking at regulatory mechanisms to help deal with price and demand risk, this stuff is expensive. What role, Romain, do we think public finance should have in helping get some of this away, and what have you seen being successful so far to date in hydrogen sector projects and energy transition more broadly?
Again, from a European perspective, I think there is a toolbox of public support mechanisms that can leverage private investments. This toolbox is composed of instruments targeting the DevEx, targeting the CapEx, and even targeting the OpEx at a national or at the European scale. And for instance, two of our projects, of ESAF project, was among the winners of the innovation funds, which target the CapEx. There is also some reform of the state aid rules in Europe that are aiming to facilitate the new mechanism. Alongside of these mechanisms, there is also the European Investment Banks that has some tools for guarantee, for debt, for equity stake. So overall, I think the toolbox is quite complete. There is still needs to fix and to patch some tools. But these tools are not only for hydrogen infrastructure, it is for the whole ecosystem. For ESAF, so there is also some mechanism. And the toolbox will be completed for the ESAF with a double-side auction or contract for difference in order to facilitate offtake agreements. So I think the toolbox is here. It is now our role to use these tools and to move forward with our project.
Speaking of tools in the toolbox, Alicia, are there any other sources of funding that you'd be looking for if you needed to deploy huge sums of capital to get these networks going?
I mean, I would definitely look to ECAs if possible. So anything that I need, any kind of equipment or anything that I can source from a country that has a strong ECA partnership, I would definitely look to. So if I could get any of my equipment from Denmark, I have IFO on my side. That's a good source, not just of vendor financing and lowering the cost of the project, but also insurance. They give you insurance that can help with scaling, that can deal with issues that you actually can't buy insurance for. So ECAs can be really helpful, and I would definitely, if I was especially in Europe, look at that. And then, and of course, Asia also has ECAs. I mean, all the OECD countries have some kind of ECA policy, and I think they're extremely helpful. People really forget about them. And then, obviously, just standard having a good debt to equity ratio is very helpful, and grace periods.
Fair enough. Lionel, final point on liquidity and bringing money in. Mm-hmm. I mean, in your business, how have you seen public finance be helpful for kind of scaling up and getting things going?
So grants have been helpful to kickstart the project. Also the support and the partnership with the country in terms of, for instance, sovereign wealth fund have been are critical, in particular for the long term. And that also enable us to bring further partners that are strategic partners towards development of the technology and also of the market, and bring that on time in line with what we see time to market, but also time to technology. And so far it's been very helpful, and we thank, in our case, the French state for that, and European Union. And when we look forward, that's always what we look for, a partnership with countries that can help us bring the solution, but also the ecosystem to life.
Very good. So the stuff is big, it's challenging, it's expensive, and there's risk. We don't know who's going to use it, how much they're going to use it, what they want to pay for it. We've got all sorts of challenges today, but we also have a number of potential fixes for those challenges, which we've gone through: regulatory clarity, regulatory asset-based models to deal with the demand risk, and public finance. Lourdes, final question for you. We've been talking about a system as we are imagining it today based off of the technology that we understand today. If you had a kind of a scientific crystal ball and you could look forward 5, 10 years, how is the technology going to change in terms of production, cracking, or otherwise, that might completely change the infrastructure needs that we think we have?
Magically? So I think if I give you a classical answer, or the answer everyone will expect, I will say there are 3 main areas that will really make a change. One of them is improving the electrolyzers that we have right now for hydrogen production. Of course, if they are more flexible, cheaper, and more efficient, the whole thing will revolutionize the cost of producing green hydrogen today, and it will give confidence to the investors. So this is one. The other one that I think is easier is actually work a bit more on the hydrogen carriers. So if we have the investment or the moving the transportation through liquid organic hydrogen carriers or methanol or ammonia, this is easier because the ports and the ships and everything we have can be more readily available for that, provided we have the safety and environmental care that we mentioned before. So this is short-term, a way to do that. And the third one will be digitalization and monitoring. So we can improve the way hydrogen is delivered or its derivatives by doing this easily, because we can improve the sensors, we can improve the digitalization of the systems, we have predictive maintenance. So that will really de-risk the way we move from the technology side. But my bet is that what it will really revolutionize this is applying, in the right way, artificial intelligence. Why? Because then we can change the whole way in which we design the systems now. So we can now think of where is the hydrogen needed, where is the best place to produce this hydrogen, how do I transport it to where are the final off-takers. So I can use a much better way of optimizing this market, which is very important. And I can give you a few examples. Optimization of the way we do any of these things by using AI tools. The other one will be digital twins, so you will see when any of these parts of your infrastructures will fail. The other one, and we are using this already, and in our center we are using this very heavily, using AI for materials discovery, so that you will have better catalysts, better materials for the transportation, better alloys, etc. And of course, the final one is the planning of having everything integrated, correct? So you can have models that will allow you to see the best cost and also the less environmental impact on everything we do here. So I think AI, as I say, used in the proper way and in an integrated manner, can revolutionize all we do today in hydrogen.
Brilliant. We are out of time, so I'd like to thank the panelists very much, and we'll call it there. Thank you very much.